Nigeria's economic stability remains under severe pressure as fuel prices reach unprecedented highs. While the Dangote refinery, which is the largest in Africa, has successfully scaled its domestic gasoline supply, this month it remains exposed to international market volatility due to the ongoing war in Iran. Despite achieving significant operational milestones, the refinery is struggling to achieve full independence. Currently, 650,000 barrel per day refinery meets over two-thirds of Nigeria's daily gasoline requirements of 60 million litres. However, a significant gap remains between its processing capacity and its local feedstock allocation.
On volume, so right now we get an allocation of 5, so we deal in Suez, let's say 950 million barrel cargoes, we get 5, we could easily get 13 or more.
To bridge this gap, the refinery has been forced to import crude at international rates driven by the conflict in West Asia. Officials even report paying premiums as high as $18 per barrel over the Brent benchmark, which translates to roughly $137 per barrel at current market rates.
I understand that the Dangote refinery isn't getting sufficient volumes of crude here. So they need to also import crude, and that then means it adds to the cost. Those costs we're avoiding by locally refining. You still have to pay them if you have to bring in the crude you are going to refine. I think that's one critical point. But you can then argue that many of the other countries too have to bring international crude. Like South Africa is not a producer, so they have to bring in international crude. So where is it higher?
These logistical costs have trickled down to the consumer as well, with Dangote having recently implemented a 13% increase in petrol depot prices, a move that has doubled transportation costs for a population that's already been grappling with stagnant wages.
Population is increasing, salary is not increasing. My journey of 1,000 has increased to like 2,000 plus. The government should look into the fuel. It's too high. We cannot cope. We are just struggling. Eating is problem. Feeding is problem. They should look into it and help us, because fuel is a major key in the country.
In a bid to address the crisis, reports claim that the Nigerian National Petroleum Corporation has increased maize allocation to 7 cargoes for Dangote oil refinery, which is up from 5 in previous months. While this marks an improvement, it remains far below the 15 cargoes required for the refinery to achieve full operational independence from the global spot market. Getting us more details on this is our correspondent Louisa Olani, who sent us this report.
Amidst rising petrol prices across Nigeria due to Middle East crisis, the Nigerian National Petroleum Company Limited has increased crude oil supply to the Dangote Petroleum Refinery from 5 to 7 cargoes for the month of May, in a move aimed at boosting domestic fuel production. Dangote requires 13 to 15 cargoes daily, but receives only 5 from NNPC, forcing it to import the rest at prices dictated by international market, thereby making it increase depot price by 13%. Nigerians hope that the NNPC provides all Dangote refinery needs to meet up the country's estimated daily demand of 60 million litres at cheaper rate and cut off Nigeria's dependence on imported petroleum products. From Lagos, Nigeria, Louisa Olani, WION The World.